Welcome. We're glad you are all here. Today we're talking about inventory basics for meat and livestock operations with Mariam and Olivia. And thank you everyone for being here. We're really glad you're here. And now I'm going to pass it over to Olivia.
Hello, everyone. Thank you, Leah, for that wonderful introduction. I'm Olivia. I am here representing the Southwest Grass-Fed Livestock Alliance, and we're going to dive right in. And so, Mariam, if you can share our presentation. Awesome. Just give us a minute, folks, while we do our fancy tech stuff. So welcome. I am here representing the Southwest Grass-Fed Livestock Alliance. We are a nonprofit organization based in New Mexico, but serving the whole Southwest, and an alliance of ranchers and farmers and land stewards, chefs, conscientious individuals working together to support grass-fed livestock production. And we do that through public outreach and producer support and events and original content like this webinar, partnerships with other organizations to provide programming. And this series of webinars is sort of coming on the tail end. It's like an adjunct bit of our Bringing Meat to Market series, which was an extensive business training series that we launched over the last few years that lives on our website, which I'm going to drop into the chat, which covers a number of different areas in business training for getting your meat direct marketed out into the world. So I encourage you all to look us up and check out the member resources that are available of all of our past trainings. There's, I think, maybe 15 different courses online that we have. And membership is still free for this year. Membership was waived by SWGLA in response to COVID hardships. And with that membership, you get access to all of our past webinars, which include a lot of tools and templates and training. So I really encourage you all to check that out. I am an educator and consultant. I run my own firm outside of being the program director for the Southwest Grass-Fed Livestock Alliance. And I have a background in agriculture and in food service operations myself. And I work directly with farms and ranches and nonprofit organizations. And we're also joined today by Mariam from Bernoulli Finance. Mariam, do you want to say a couple things about Bernoulli?
So we at Bernoulli, we assist mission positive ventures with all of their financial needs. So all the way from planning, helping find financing or loans, all the way down to bookkeeping and everything in between. And we specialize in, we work with a lot of companies across different industries and market segments, but we have a deep focus in food and farm businesses. I actually work with a couple of farmers and a seed business. And myself, I have very extensive experience working with small businesses, also in a very diverse environment and sectors. My specialization is in financial operations. So everything that has to do with financial systems, and then also audit, like non-accounting audit of your books and your financial setup. So helping companies with figuring out which systems work, and how to get them all to give a good picture of your finances. So
cool. Thanks, Mariam. So I want to start us off with a little bit of a chat. I want to hear what everybody feels about inventory. What kind of emotions does that trigger? And drop in the chat what that feels like for you. And I also want to know who else is tracking their inventory with any kind of system. And you can tell me about the system or just drop it in there. And I'd love to hear also what else you'd like to learn from this course, what you're excited about to get out of this course today. So what we want to give you is an understanding of what inventory management entails and why it's important. And we're really going to be focusing on the management aspect of things. And that means the nuts and bolts of how you go about it. And we're going to overlay that information with a bit of knowledge about how inventory and accounting line up. So we're going to skim the surface of accounting. Then we're going to go a little bit deeper, but we're not going to go super all the way deep, because what we want to do is introduce concepts. And we have some other resources to point you to. And we do also really want to make sure we're touching on the practical of what it means to run your inventory. And the goal is so that you feel like you know what you're looking for when setting up a system. We're going to focus mostly on providing you information about what your system options are, and then using that system to think through good business decisions. So as Leah already mentioned, this is inside of a little bit of a package deal about meat and livestock, taxes and accounting specific to inventory. Part 1 was last week. It sort of blew our minds. The video will be up on the Quivira site soon. And then next week is part 2. And I'm going to reference that a lot here just to remind you that there is more information in those webinars. So, inventory defined. Oh, my little arrow. Come on. All right. So I'm going to start by separating out the idea of your livestock operation and your meat operation. So some of you are here to understand one more than the other. Maybe not all of you run both. That's okay. I would love for you to know how it connects, because again, I think that the underlying premise of this conversation is also that there's a lot of advantage to selling your own meat if you're a livestock operation. And this is how the two play out inside of inventory. So the original concept I want to throw out there is that essentially raising animals on your ranch or wherever you are is a different activity than the meat business itself. We can logically understand why that's true. It's especially true in the eyes of the IRS. And you can think about it in the eyes of the IRS as your Schedule F versus your Schedule C. So Schedule F is usually agricultural activities, and it's always agricultural activities. And your Schedule C is other types of business reporting. Now, the caveat is I have almost no knowledge about taxes, but as a business advisor, I glean a lot of knowledge from other experts like Poppy, who taught our class last week and next week. But we're grounding this conversation in some little moments of tax knowledge, one of which is that the feds really do think about your income as different if you're just raising livestock or if you're selling meat. And meat is the business activity that happens from the point of harvest onward, and it's not considered agricultural income. So there are complex rules about the requirements and options for keeping meat inventory, and there's no requirement from the IRS to report live animal inventory. Let's just sit with that for a minute. There's no requirement to report your animals as inventory, and there is a requirement to report to the IRS your meat inventory. So why do we care? It gets complicated because inside of running our business, we want to do things that make management easy, which we're going to talk about why we want to keep inventory at all from a management perspective. It's just a little unfortunate because the IRS wants things sort of a different way. Today, we're going to focus on management, but we're going to reference some of the other learnings that happened last week. So what's the ideal scenario? I see some questions coming into the chat. That's great. Just hold on to them and we will get to them at certain breaks in between our differ't sections if it feels appropriate. And then we're going to have some time at the end for Q&A. So here's an ideal scenario. Here's the ideal scenario is that you separate your ranch business from your meat business inside of your accounting by keeping separate books. That doesn't mean you necessarily have to have separate legal entities, but you may, and that actually depends on the whole context of your business and personal world. So we're not going to get into whether you need separate legal entities. The cleanest and easiest way to do things, especially from a tracking of costs, which are very different in a livestock operation than in a meat operation, is to separate your books. Now, the caveat that I'll say here is that I've also seen it separated by classes. And that's something that is still a bit complicated, although a lot of folks that I work with do separate it out by classes. Now, for folks that aren't familiar with QuickBooks Talk, that's kind of separate departments that accounting systems keep very isolated in a way that you can track income and expenses completely separately for both. There are some issues with that. And so let's just stick with the recommendation that ideally you have 2 separate sets of books, which I realize that many of you are thinking, I'm never going to do that. I know that's what you're thinking, but I'm still here to say what the ideal scenario is, right? So the ranch tracks your livestock production, and the meat side tracks all of the meat-based products and services that happen, including your processing fees. Now, what happens is at the time of harvest, the ranch business sells the carcass to the meat business or the live animal. Usually it happens at the time of slaughter. And most often the meat business picks up the cost of the slaughter as part of the processing. That sale can happen as an actual cash transaction or a note or a transaction as an account receivable. And whether money actually changed hands or not, there is transactional things that happen inside of your accounting that allows the ranch business to essentially get paid for that carcass. This is where you need a CPA. Again, this is where we're sort of skimming a bit on the surface, but we're talking about the basics of how to separate these 2 worlds in order to better manage your inventory, because the inventory is different. We also have, if some of these words that I'm using are confusing and scary, which they absolutely can be, there is a business structures and accounting basics course for livestock businesses on the SWGLA site that I encourage you all to go check out to start from square one for some of this terminology. And y'all will get this presentation tomorrow as part of our follow-up, and all of these links are live in it for all the resources, just so you know. So what is inventory for the ranch side? Trick question. There is no inventory. There is no actually classified in your books inventory, right? So what's your breeding stock? It is not inventory. It is a capital asset, which means it lives on your balance sheet, but it's not classified as inventory. Remember, the IRS doesn't require you to report it as inventory, and so you don't. So what about your non-breeding stock? Your feeders, your finishers, your stockers. These are also not inventory items. These are expenses. So we bring those into our system as expenses in the year that they come into production. But we still need to know about those, right? Even though they're not inventory, because somewhere along the way, we're going to make those animals into meat, and we're going to need to know a value to assign them. So what is that value going to be based on? And we're going to get to this in a minute. The preview is that it's based on the cost of production for your animal. Again, there's some more information here in some of the other courses, but that essentially sets up the difference between livestock and meat, which Mariam's going to get into in a minute, and breeding and non-breeding animals. So feed can be considered inventory as well. If you purchase bulk feed at the end of the year, there might be some tax requirements on reporting it. Otherwise, you can expense the feed, especially if we're talking about smaller quantities. I have seen it done both ways. That doesn't mean that that's necessarily what the IRS wants you to do. Larger farms are pretty much always holding feed in inventory. And in general, good practice, management practices, which is again what we're focusing on here today, is that you're recording that feed somewhere so that you know a basic rate of consumption. So obviously, probably what you're doing is looking back at your invoices from your feed company or looking at your bank transactions. And what I would encourage you all to do is to track it separately in Excel so that you can eventually understand how quickly animals are moving through that feed, because that's going to help you determine that cost of production on those animals. All right, so I think, well, my little arrow is having a hard time.
Oh,
Sorry, there we go. Okay, you're on, Mariam.
One
You're
more.
on.
Sure. I'll just press through because it's on my computer. Okay, so I'm taking it over on the meat operations. So as Olivia mentioned, the meat operations take over from livestock when the meat is when the animals are harvested, and this is so this is where inventory appears on your balance sheet if you are keeping everything in one company. But one of the things that we talked about, like inventory versus in tax accounting, was that like for us right now, we're talking about the management of things and how you should think about it. How you end up booking it in your accounting system, you really do need to discuss with your tax accountant. So everything I'm going to cover from this point onward, I want to say it's definitely principles, but the application of it you should do with like a blessing from a CPA, because they're different, as Poppy showed in her last presentation. If you've seen it, there are 3 different ways of how you can inventorize your meat operation, and also sticking to one for 2 consecutive years, for example, is implicitly agreeing to the IRS that you're going to be doing it, whether or not it's right. So so that's why, like, this is the big caveat. So, but anyways, but going back to like, what is inventory? Processed meat is from the harvest on, it includes a bunch of different costs. One is the cost of production, which is your, the cost of raising your animals. But you may not be doing that. You may not have enough animals, for example, for a specific harvest, or you may want to source this particular bunch from someone else. Then the cost of the meat itself is the purchase cost, like the cost of buying them from somebody else. These, some of the things that I've seen people have kind of a problem with is that the cost of buying an animal is higher than the cost of raising it yourself. And you just have to, I mean, that's just part of doing, that's why you would want to raise your own animals and then harvest them, as opposed to buying it from somewhere else and paying someone else's overhead cost on top of your own. But that's just something to keep in mind. Then there are processing expenses. So this is the labor and fee to the butcher and the processing, like everything that's related to that. There's the product packaging, and I mean the packaging that you actually package your finished units in, not like the boxes that you put it in. That's more of like shipping packaging, and also the transport or freight to and from the processor. So the live animal to the processor, and then the frozen or refrigerated transport from the processor to your farm. So it will include fuel and hauling fees and maybe some handling and whatever that they usually put on those bills. So that's one part of, that's the biggest part of your inventory. But you also may have, and some people choose to have it as inventory, others don't, and I'll explain why, is inventory of all of your packing, labeling, and shipping supplies. The reason why, not the reason, but the instance where you may want to keep it as inventory is when you have to buy a bunch at once. Like you're buying hundreds of thousands of labels or thousands and thousands of boxes or like packets or whatever, and you're getting your economy of scale, you're getting the break because you're buying so many at once, and expensing it all in that 1 month it's just going to skew your P&L significantly. So in this case, it's okay to actually record that as inventory, and then every month or every period you will expense the portion that you've used up. And so some of the reasons why you would want to do that is that if you buy a lot and you're not moving them very quickly. So it has to do with how much you buy and how quickly you are using it up. So the next question, we always ask, like, well, why do I have to manage inventory? Like, why is it necessary? Well, for starters, the IRS says that you must. But secondly, and more intuitively, your inventory is actually your liability. Like, don't think of it in terms of your balance sheet, but think of it in terms of what it means to your company. You just spent all this money feeding these animals, raising them, harvesting them, packing them, storing them, all of those things. It's money that's tied up, and we're calling it asset, but if you don't sell it, it's going to be a loss. So you have to think about your inventory as like a liability to you. You got to move it. You got to move it really quickly, and you got to move it smartly so that you get the maximum dollars for the money that you've put into it. And managing inventory has two components. It manages what you have right now, or it helps you manage what you have right now, everything that you have in stock. And it's also helping you manage how you're going to have inventory later and how you're going to plan for it. So in the moment, we're talking like, where does it help knowing your stock, knowing how quickly it moves, knowing your margins and everything? Well, first of all, knowing what you have on hand just simply helps you direct your sales. We have some, like I work with a farmer, for example, who does assortment boxes. And every week she looks through her inventory and she says, what am I going to put in this assortment today or for this week? And she picks inventory of meat pieces that may not be moving quickly. And that helps, and knowing what she has on hand helps her kind of move some of the slower moving pieces, items. It also helps you minimize spoilage and loss. So knowing what you have today minus what you've sold should give you an idea of what you have. And then you can go into your inventory and see like, oh, well, I don't have it. Like, where did it go? And management of and timely management helps you to figure out that things have gone missing or things have spoiled. It helps you plan for storage space and lower your overhead. So if you know that if you're renting, for example, a refrigerator or a frozen storage space, this helps you plan for those expenses. And then, of course, you know, the financial reporting is really important. So if you don't have, or you have inaccurate inventory counts, well, then you have inaccurate costs for the given period. If you don't have accurate costs of things, then you have inaccurate margins, and you end up overspending or underspending, or just not maximizing your profits. And I know that, like, when we talk about maximizing profits, it's a bit of a, okay, it just sounds kind of dirty at this point, because a lot of people, it just kind of brings up an idea of the predatory, you know, traders and brokers. But you know, maximizing to a point, right? At least being positive, like net positive. And then also it helps you track your assets. Because you have your company valuations if you want to do raises, or for example, if you have an event like a fire, it helps you file insurance claims. So having accurate numbers on the spot would help you with that process. And then there's the part of, how inventory management helps you forward? Well, it definitely helps you manage your cash needs, because you can plan for when you're going to do the next harvest, or when you're going to buy more animals, or if you need to invest in something to help you get to the sales points that you want. And it also helps you project what cash you're going to get in the future, you know, given that you're going to have harvest and you're going to have sales in the future. It's going to help you, obviously, managing your purchasing and production schedules, helps you with breeding and processing schedules. It's going to help you improve your ordering, because you know when you're going to need it, so you can actually manage the lead times on some of these things. And these days, with the supply chain as broken as it is, or as damaged as it is by COVID, it becomes very, very important. And then another thing we can do is that you can anticipate demands and know when you have peak seasons. Coming back to this farmer that I'm working with, she knows every like quarter, she knows what kind of meat cuts she needs to order based on what people are cooking. And she knows that not only from, obviously, like, because she cooks her own meat, and she knows that, you know, pot roasts are in the winter and steaks are in the summer, but also the finer details. And that helps her manage the seasonality of meat that exists. So that's why you want to have a proper inventory management. And from here, we're going to go into the accounting of it. So Olivia, I think this is yours.
Great, thank you. Okay, so
should we ask questions?
Yeah.
Is this a good time to ask, like, see if anyone has any specific?
That's a great idea. We had some bubbling through the chat that I think I answered all of them.
Okay, good.
But let's take a pause. Anybody else want to holler anything out while we're here? I mean, we're just getting started, so I don't want to delay us too much here. But
Okay.
if anybody has a pressing question, holler it out or drop it in the chat, or just unmute yourself and talk to the humans. Okay, cool. I'm gonna keep going. Okay, livestock accounting, breeding stock. Again, let's revisit. It's a non-inventory asset. It's depreciable. And the price that you pay for it, if you buy it in, is the basis of your depreciation. If you raise it, if you bring it up from birth, it has essentially a zero cost basis. And that gets calculated outside of your accounting system. Obviously, we know that the IRS wants to know about depreciation, but that's something that you do with your CPA. Let's not get into depreciation right now, because I don't also know very much about that, because we're here to talk about things like coolers and thermometers. And we're getting to that part. So it's on your balance sheet. And what we recommend is that you have a lump number on your balance sheet for all of your breeding stock, instead of like Bob and Bruce and like Mary Jane or number 325. We don't want to see all of that in your balance sheet. We want breeding stock lump number. That said, you need to know about all those individual animals, obviously, and especially need to know when they're being transferred from one class into the other. I mean, that's in a cattle situation, but it also is in, you know, any kind of breeding situation for any species. You're going to be wanting to track your stock flow. And so we suggest that you do that somewhere else inside of Excel. I mean, the paper is great. Go with paper. We want you to know those things. You need to know those things, but we don't need to see all those transfers inside of QuickBooks. I have seen it done with what's called transfer accounts. And I've talked to lots of people that have all sorts of different opinions about whether that's a good practice or not. But I'm going with put your breeding stock on your balance sheet as an asset and keep your stock flow somewhere else. Oh, come on. Mariam, do you want to go forward one for me?
Sure.
Thank you.
Okay.
Okay.
No, I think we went too fast.
Yep, right here. Okay, so non-breeding animals, stockers, feeders, finishers, and all the other words for all the other species. Those are expenses if you purchase them in, which is kind of obvious, right? Maybe not. Anyway, they are expenses if you purchase them in. And otherwise, where their cost is reflected indirectly in the cost of production. So all of the feed that you purchase, all of the other direct variable costs that go into raising that animal is basically what the expenses are. And then we're about to get to the place where this livestock is going to need to become meat somehow inside of our records. And what we're going to do is transfer the value to the meat inventory, which is what Mariam's going to talk about, when the animal is harvested and processed. And what is that value? Again, it's based on the cost of production. So all of those direct variable costs that you accumulated will then be transferred, usually as $1 per pound amount on your animals. And the way that you calculate what that $1 per pound is, here I am again skimming the surface. We're not going to go too far deep into valuation, but what it usually is based on your annual average per pound. So all of your cost of production expenses divided by all of the pounds of meat you harvested for that species gets you a per pound cost that for your now meat inventory. And that is something that we track in Excel, like tracking how that actually adds up to get you that final cost per pound. Or you can track it by inventory lot cost. So if your costs are changing radically quickly, then you might want to track by inventory or smaller pieces of time rather than say the annual average of the year. Red flag here, if Poppy was here, she would be dinging bells saying anytime that you associate cost with a quantity, you need to know that there is a tax implication, which means you are electing a style of inventory reporting. which is what she is talking about. For us in the management world, yes, that's true, but we know we need a cost per pound, right? And so we're going to calculate it somewhere. For now, we're going to leave out of the discussion what the IRS thinks about how we do that, but all you need to know is that they do care. And so do we. So from a management perspective, we're transferring that cost of production from all of its bulk expenses into an average cost per pound for the species for a relative period of time. So just a reminder on what goes into cost of production: feed, supplements, vet, transport and hauling to and from harvest, and any direct production labor costs for raising of your animals. Those are the costs that move up and down as your number of head move up and down. So think of it that way. If your units go up, if your head goes up, if your herd gets bigger, these costs get bigger. We've got 3 webinars on how to calculate your cost of production. I've got one slide here, and I realize some of you are probably going, what? Hold on, go to the SWGLA site, watch 3 different webinars on how to determine your cost of production, including a super cool tool, which is the yield and livestock calculator, which we're going to be replaying that webinar as part of this Quivira series next month, and then having an hour-long hangout session to talk about it. And it helps you also spit out that number of how you actually value your pound of meat, which now Miriam's going to get to. I think you're next.
So
Yes.
before we get into the meat specifics, I was really hoping for a really cool play on words there, but no. I wanted to revisit the inventory equation. And because this is a base for any inventory management. And so I just wanted to revisit it just so that we're all on the same footing, because I'm sure a lot of you, if not all of you, know it, but it's the foundation to what I'm going to talk about. So the beginning inventory is what you have in stock in the beginning of the time period. So let's say today you do your first count. It could be 0 because you haven't put anything into it, or it could be something that you've kept from last month. Purchases are as what you purchase or you transfer, in our case, from your ranch activities. It could also be labor and overhead. Sales is what you end up selling or transferring out from your inventory. Then you subtract out waste, or it's also called spoilage, and theft, which is also referred to as shrinkage. Sometimes you hear these interchangeably. And then that ends up with ending inventory. So beginning inventory plus purchases minus sales minus waste minus theft, and that gives you what you have at the end. Now, all of this works, and you have to select a specific time period. And when we talk about time period, it could be a month, a quarter, a year. It's really never longer than a year, and very rarely less than a month. I've seen people who were obsessive with inventory. I did inventory every week, and that's common for high-end items, like jewelry, for example, or pianos, or you're not counting very many things. But in the meat world, a month is the shortest really time period that I have seen. And that is the time period that is comfortable for you, where you're not breaking your back or having to hire a bunch of people to help you manage it. But it's also not too long, so you lose the sort of connection with what happened in that given period. Because if you're doing it, you could be doing it annually, and then you're like, what happened in January? I don't remember now. Why is this lost? What happened? And you sometimes forget if you didn't keep really good records. So for the meat business specifically, this inventory equation gets really complicated around the purchase and sale part, because this is where we talk about what is the cost of production, what happens there, as opposed to if you were just buying and selling something. If you bought a bottle of juice and then you sold it later, this is really easy. You know exactly what the cost is. But in our case, we have to figure out what these costs are, and that's where it gets a little hairy. And I'm going to try to kind of break it down into smaller components so that it becomes a little bit more manageable, let's say. And this is where we get into the inventory, meat inventory accounting. Before we get kind of into the specific steps, I wanted to bring out a few definitions. So the first definition is raw materials. Raw materials for meat business is the cost of the livestock that is transferred from your ranch activities. I guess that's the cost of production. Or if you're buying it from somewhere else, that is the cost of the animals that you paid for. Then we have this concept called work in progress. And that's basically covers that whole entire chain, which can be quite long for some and very short for others, of harvesting and processing. And there could be one step, it could be 2 steps, it could be 3 steps, but that's all called work in progress. Finished goods are the goods that are now in their final state and they're ready to be sold. And cost of goods, it's really the cost of finished goods. It's just everything that we talked about up until now, raw materials, work in progress, and finished goods are sitting on your balance sheet because that is your inventory. And the cost of good is sitting on your profit and loss statement, and that becomes an expense when there's a sale of that item so that it offsets the sale, and that's how you get your margins. So meat accounting is basically talking about from raw material to finished goods to COGS. And in order because there are all these steps and there's all these considerations, you need to decide on a very formal and consistent approach. Because as you know, we say garbage in, garbage out. And that's what happens here. If you change how you look at things from quarter to quarter, for example, you're not going to have consistent numbers. So you need to decide, I'm going to think of something in this way and stick to it. Granted, though, always a caveat, talk to your accountant if it's something, just to make sure that this is okay in the eyes of the IRS. So here's that same inventory equation, but in the for all these different parts of a life of meat in inventory. So the very first line, it's the same equation, talks about what happens when the meat is harvested. So raw materials, we're going to just ignore for a second the packaging inventory. So raw materials, this is where it comes in from being harvested. Like it's at the point of harvest, let's say. You start, if you have any meat that's been harvested but hasn't gone very far, that would be your beginning count. Then purchases would be this new harvest that you just undertook. And then used in production is any meat that now has moved on to the next step of the processing process, to the next step of processing. And then you subtract the waste and theft and shrinkage and loss and whatnot. And that's how you end up with the end inventory in your raw materials. So again, raw materials is if you have usually, if you have harvests that are spaced out, you start with 0. Because when you harvest meat, you immediately use it up, and then you process it, you package it, then you move it to finished goods. You don't typically hold on to something for a very long time. So it's normal to see your starting inventory kind of being 0 because you've cycled through it. But sometimes things remain. So it's what you have harvested before, plus anything that you've harvested this time, what you've used up, and now it's gone to the next step of being processed, and then minus any waste or theft. Then it brings us to the work in progress inventory. So this is, again, usually you start, you may have something there from previous harvests. Like you've harvested an animal, and it's been sort of roughly cut up, but you haven't kind of cut it into smaller pieces. I've seen that happen for a client who was working with a very small processor or butcher who couldn't process the entire order of animals that she brought. And so they were doing it piecemeal. So that what was happening is that her raw materials were being depleted very slowly, and the work in progress inventory was kind of growing very slowly. So she always had something to start with for that specific harvest. So it's what you have in there originally, then what you've brought from the harvest that hasn't been quite processed yet, minus what you've just processed all the way through, meaning you've cut it into whatever pieces you wanted, you packaged them, and then you put them in a box and you sent them away. And then minus any losses along the way. So what we would call the steps of, like processing, it's and what you end up with, it's the yield of production. How this step, incidentally, can be like you could have two work in progress inventories. You can have, I've cut up the animals like into very large pieces, and I've kept them in that way. And then I'm later going to cut them up in smaller pieces. So that's kind of like two chains if you think about it. And then you have your finished product inventory. Oh, sorry, one thing I didn't talk about, and this would be a good, sorry, I'll omit it, is when you're talking about the raw materials, you're kind of thinking about it in pounds. So you have number of animals that were harvested, but once it becomes raw materials, you're thinking about it in pounds. I have 1,000 pounds. When it enters into work in progress, it enters it as pounds, and you're thinking, okay, so I have those 1,000 pounds to process. But when it goes through the whole chain of work in progress and then goes into finished products, you may be thinking it in different terms. You may be thinking it as units. You may be thinking it of cases. You may be thinking it of some other unit of measure, basically. And then once it enters the finished product inventory, it could be still, let's say, individual counts of like the package. Let's say you do ground beef and it's always 1 pound. It could be like number of those 1 pound ground beef containers. Or you could have a case of ground beef containers, and that's how you think about your finished product inventory. And so here it's really easy. So beginning count is of what you have on hand, and usually you have kind of a running balance. Then you have a yield from production. So everything that's now finished and packaged and ready for sale. And this is where you may be adding some additional costs of, let's say, outer cartons or ice packs or dunnage of some sort, minus what you've sold and minus anything that was wasted or stolen. Something that basically doesn't pass your quality control and something that just like walks off the truck. And then you would end up with the ending inventory. Sorry, wrong. I have two monitors, so I like pressing. So how do we apply all of that? Like, what are so you're looking at this and you're like, okay, right. So this chain, this is how it goes. And you have more practical questions. So some of the questions I was thinking about you may be asking is, well, how do I track my meat inventory? Well, like actually how? In your accounting system, you most likely would be tracking it by species and a total dollar value, because that's how your accounting system would be set up. Simply, you just input your species like lamb or beef or whatever, and then you put the dollar value, and you can say, okay, so this is my raw material, this is my work in progress, this is my finished goods. But in your inventory system, you actually most likely, you are going to be splitting it further down into a SKU level, for example, or like a cut style. That's another one that we see. So I have, and also weights or counts. So instead of just having a total dollar, you would say, like in beef, you would say, I actually have 1,000 of 1.5 pound steak packages. And so that gives you both the weight and then the cost of, like, I don't know, $6.75 per package or something. So in your inventory system, you would actually have more information. And the reason why they would add up to the same number, but it's just the accounting systems sometimes are limited. They may not give you enough like room to stretch and add a lot of information, and you may be doing this elsewhere. So how often, that's another question, how often do I count my inventory and make adjustments? I talked a little about it, that it's really important because it's fundamental for your inventory system. We could be putting anything we want on paper, for example, and saying, oh, okay, so I started with this, I lost this, I got to this, and this is what I expect. And then you do an inventory count, and that's basically grounds your calculations in reality. And then vice versa, you can do everything based on your actual counts, and then you sit down later and do it on paper and see how they don't connect, because you realize that your normal expectations are way off from your reality, or your reality is way off from the normal expectations, and you have to go in and see why. So that's why inventory counts are really, really important. They check your process. They check your inventory against expectations, and vice versa. Your expectations are checked against reality, and you're constantly adjusting. Well, not adjusting it, but you're constantly looking at it and seeing like why they don't match, and that usually leads to like, oh, so we need to do something differently, or it is what it is because that's just the nature of the world right now. How often? At least annually, because the IRS needs you to have a realistic inventory at the end of the year. But doing it quarterly or monthly is more common. And you pick quarterly or monthly depending on how you track your inventory. If you're doing it all on a spreadsheet and it requires some like calculations, quarterly may be easier because you only have to do it once. If you have a proper inventory system that literally like helps you figure it out in live, monthly is more realistic. But whatever that is, you have to stick to it. If you pick quarterly, you run quarterly. If you do monthly, you run monthly. You could switch your methods within, let's say, from year to year. But I typically recommend just stick with something that is comfortable for you and that you can reasonably do over and over again. When you are adjusting your inventory, once you've done a count, you shouldn't put that into with other costs. You should have an account just dedicated to these write-offs. They could be both positive and negative, but they should be tracked separately because that gives you this actually gives you that measure of reality versus expectations. And you should be watching that number like a hawk because that's what shows any unusual variations. And where this account sits is actually on your P&L under your cost of goods sold. Because if you think about it, it's the cost of running a meat business. You are going to lose something. Things are going to get wasted because they weren't packaged properly. And then, you know, the plastic broke and you can't sell it anymore, for example, or they got iced over. So that's why we keep it as a COGS, but it's not part of your meat, like your the cost of your finished goods. It's a separate cost of good account. And then what entries should I be making? Well, it's basically, it depends again on how you're tracking your inventory, because if you're doing it on Excel, it's basically like a whole bunch of, you know, journal entries. If you have an inventory system, it does it for you. But essentially the entries are going to, it's going to reflect that inventory schedule of inventory equation of movement of your products. So you're going to have an asset of raw materials and it's going to move into work in progress asset account. And then from there, it's going to move to finished goods. And then from finished goods, when you sell, it's going to go into the into cost of goods sold. And then any write-offs and counts and whatnot gets entered separately. So some of the things, so we thought that, I mean, this is all pretty straightforward, but there are some indicators that you can watch for in addition to just like how your inventory flows, and because they help you for all the planning that I talked about or for all the measurement of your performance. One of them is the inventory on hand. So knowing what you have on hand, it's done at any given point in time. You could do it monthly when you do your inventory count, or if you have an inventory system, it can actually tell it to you in real time. Like today you have this much, yesterday you had that much. And what it includes reserved inventory normally, what you've now earmarked to sell to somebody, but just haven't shipped it out yet. And it also includes unreserved inventory that's available for sale. Knowing how that's split is helpful because that can give you an idea like, oh, I need to, for example, if you have two warehouses, like one in far away from where you're fulfilling from, you can say, oh, well, I'm running low in my available inventory. I got to hustle over there and bring another load or another case of something. So that helps with just managing. And then it would also helps you if you look at your stock levels every day and see if there are any dips, if there's any seasonality, even within a week or within 2 weeks or a month. It also helps you sort of plan for things better. So an inventory on hand number all by itself, today is not going to tell us much. I mean, it's going to tell us some things, but if you track it over time, it starts telling you a picture. And how do you calculate it? Like I said, either you do the counts manually if you're keeping your inventory on a spreadsheet, or versus expectations, or if you have an inventory system that does sort of live updates, then you can just, it's literally like a report that you can run. Another indicator that we find useful is the fulfillment accuracy. So fulfilling accuracy is a measure of how often you get the orders right. It starts at picking and it goes all the way through delivery. So this is how correct your team fulfills the orders. Do they mix up the different weights of the same cut style, for example? Packing is how well do they pack it? Does the dry ice melts too fast? Should you revisit it? And where customers say, oh, it arrived warm, I had to throw it away. And then the delivery is just like how timely the delivery is. The delivery is like how you give it to your the shipping company, and is there any mistakes along the way there? And wrongly filled orders, especially in the food business, it costs you money, but it also costs you credibility, because it's something we consume, it's something we eat, so it's a lot more sensitive in that way than if you were selling an item that's shelf stable, for example, or that is not.
I just want to jump in here real quick and just say, this is for those of you that are running e-commerce. So that's what this key indicator is about.
Thank you.
Many of you are not doing that, presumably. So this is for the e-commerce folks.
Got it. Okay. Well, actually, if you're doing wholesale business and you are responsible for your own, like saying shipping it or delivering it to the customer, that kind of relates to it as well.
Yeah, that's true.
Yeah. So, but a lot of it, like they come and pick it up or whatever, but just think of it in terms of fulfillment, like how do you fulfill an order, be it e-com, wholesale, or even at a farmer's market. And so you don't calculate it, but you track it. So you track the instances. You can do it on a piece of paper, and just kind of see if you have any patterns that you need to address. And the last metric is that the one that I ran into was the on-time shipping. So again, this is becoming a little more e-com specific. Is that basically how you ship something? Is it on time? So it's like on time shipping it out, and then it's on time delivery. Again, this is just, you can't really calculate it, you track it. You track its performance and see how many exceptions to the rule or expectations you have. So this is another metric that measures your operations and gives you some ideas on how you can improve. And so with that, I'm actually going to hand it over to Olivia, who's going to talk to you the inventory.
Thank you. There's actually one question that I want to get to, Mariam, before we pass it over to me. That is, what about if you have real-time inventory being adjusted by your online sales system whenever you make a sale or take in inventory from the butcher? Is there a reason to also update the inventory periodically in your accounting software more than annually? Which is a great question.
So when you have an e-com system, or when you have a live system that feeds into your like your sales are dependent on it, you actually have to update it a lot more frequently than annually. I would say perfect world scenario would be monthly. I feel like more than monthly is a little tedious, but you should be doing monthly inventory counts and adjusting it. Did I answer the question? I'm sure.
For me, you did. Maybe Sprayke can tell us if that's clear. I mean, the reason is for what is inside of that inventory equation, right? Because your POS system is not able to catch things like waste or loss or theft or anything like that. It's catching.
And because it's live,
right.
Because every time you make a sale and a customer gives you money, and they go through the motions, you set up an expectation, and the worst thing is disappointing people. That is like the worst thing in retail. So you'd rather disappoint them by not having it available and saying that you'll have it tomorrow, rather than disappointing them and not fulfilling it, because they already have an expectation that they're going to get it. So that's why you should do it more frequently.
There's another question here, but I think we're going to push forward if we can, because it's a QuickBooks question, and I'm gonna try and see if my arrows will work. Yay. Was that me or you?
No, it's you. It's all you.
Yay. Okay. Operations. Okay. So this is where we get dirty and cold. I should have a slide about what to wear. I didn't add that slide. I have to add that in. Okay. So how do we actually do this counting? My message to you all is just start somewhere. We've just learned from Mariam that we need to be counting no matter what. I would definitely recommend for most of you that it is happening monthly, because there are a lot of things that can happen that you're not totally aware of or in control of inside of a freezer or frozen based system, let alone inside of a fresh system. So just start. Wherever you are, start there and don't get too overwhelmed. Really, we just want to start to get our eyes on our own inventory. Again, this is how you're going to facilitate and manage sales better. So it's a really meaningful tool for your overall business management. And we're trying to just maximize what we're being able to push out the door by knowing what we have left to sell, right? So every motion counts and needs to be recorded. Some basics on, I'm not going to get into regulations, but I wanted to give you guys some resources for regulations, because obviously we start talking about inventory, we start thinking about packaging, we start thinking about labeling. We are going to talk about the cold chain, but I wanted to point you towards these resources. We've done an extensive supply chain primer the last 2 years at the Regenerate conference. It's online and the videos are online. The Niche Meat Processors Assistant Network has a ton of on processing regulations and approval. And I've got some links in here for FSIS and even dipping into special claims. I know your brains are working about those things right now, but that's not the focus of today, but I did want to leave you with some of these. In general, you're not required to register your physical location with the FDA, okay? So we're here now in meat storage. And you're not subject to most of the FSMA Act rules if you're a small scale farm storing your meat post-processing on site. There's plenty of things you need to do, but you're not under the same jurisdiction as FSMA. So the USDA doesn't also regulate your pickup, but they do want it in covered vehicles. So i.e., ideally you have a truck bed with a camper top on it, and keep your vehicles clean wherever the meat is being held. And ideally, you also know when your processor is freezing your meat and whether it's blast frozen. So if it's dropping the temp really quickly in a small amount of time. And also just inquire about whether fresh meat delivery is available at the time of actual processing. So you might be in a frozen system, but there might be a lot of benefits to you to picking up some fresh at the time, and your processor may or may not be willing to separate out your carcasses in a certain way such that you could actually pick up a certain amount of your inventory fresh. So that's just a negotiating tactic with your processor. If you're wondering about how to talk with your processor in ways that make you all feel good, we have a course on that as well, as I'm sure you can guess, about processor communications and relationships. So for those of you that are relatively small, what I recommend is literally a clipboard. So you've got freezers or coolers, and every single time a cut or a bulk weight goes in and out, it's recorded on the clipboard with the date, what is taken out, the weight, and the reason that is moving in or out of this storage unit, and who is doing it. This allows you to track back for when there's actually problems, and the fewer people involved in inventory, the better. So we want to keep fewer brains and hands involved in this process, just because they're leaving less room for human error. So what are the reasons that meat can leave a storage facility? This storage facility being offsite cold storage or your freezer or cooler on site. This goes back to that inventory equation that Mariam was talking about. We're recording these reasons so that we can eventually actually track the meat itself in our inventory system and in our accounting system. So it goes out for sales. and we ideally need to know what sales channel it went to. So when you're physically removing 50 pounds of shoulder to take to the restaurant account, it goes out for waste or loss. You find a package that is actually no longer usable. You take it out. You take it out for personal use or staff use. And you take it out for marketing or events or samples or demos or special happenings. And all of those different reasons get translated actually into your books in different accounts, right? Because waste is not the same as a sale, is not the same as marketing. And we have those line item expenses inside of our accounting for those reasons, which is why when you physically move the meat, we want to record what it's going to do. So what do we record when the meat comes in? This is what we call purchases in that inventory equation, right? So it's either coming in from your own processing and production, or it's coming in because you actually bought someone else's meat and you're going to resell it, or somebody else's carcass, right? And a general rule of date is that I think we all sort of know, but just to reiterate it, is you ideally use the oldest inventory first. And that we like to say is first in, first out. And so ideally your cuts have a visible date on them so we can actually manage that first in, first out. This is tiny. I'm sorry if this is too small for you guys to see, but this is an example of then that clipboard getting transferred up into an Excel spreadsheet, right? This is the inventory reconciliation chart where we're actually starting with our beginning inventory. This is our cute little inventory equation here. We have the unit that we're measuring in, which could be packs, it could be boxes, it could be pallets, it could be cuts. We usually are working on pounds because it's easy to transfer it all the way up through the system, but that's up to you. We've got our beginning inventory. We have our cuts on the left, our beginning inventory count, what has come in from processing, what has gone out from sales, what has gone out for marketing, out for personal use, any other category like, I don't know, on-farm dinners or something that you might want to track differently, waste and loss. And then you have a formula that calculates your ending inventory. So I just wanted to give you guys that visual. Okay, so like I said, Mariam said quarterly. I kind of say monthly because you'd be surprised how many times you open the freezer and it's not working and you didn't know. So if you're not in there frequently, you are not going to find out what's spoiling in there. And if you're doing a physical count, you're then going to reconcile that against what you have in your clipboard. So you're literally, yes, taking the meat out and counting it and weighing it. You can do this with bus tubs more easily so that you can get bulk weights on a specific style of cut. And then you're looking to make sure that your ending inventory that you have in hand is actually matching the ins and outs that have been recorded, right? And then you're keeping them in that spreadsheet. So similar thing happens actually when you go off site and sell things. So you have a different way of recording on site at a market. Now, most of the time today that's done through POS system, but some folks have POS set up so that you're actually tracking cuts perhaps, but you're not tracking weights, and you need to know weights too. So you either have a POS situation that's connected to a scale, or you're tracking those weights as you sell them. So you know the total weight of chicken that you sold at that market, because literally you're there handing it out. If you don't have a system for that, you do not know. You have somebody that took the chicken out at 5 a.m., but you don't know what chicken came back unless you're actually tracking it. So then we're doing a reconciliation between what the POS tells me that I sold that day and what the clipboard tells me went in and out of those coolers and freezers. And I just wanted to remind everybody that this handling, if you're working with the frozen program, is really important. The least amount of times that you can touch that meat and have it go in and out, the better, because you're going to get into a situation where you have a higher risk for nicks, which means you have a higher risk for frostbite, which means you have a higher risk for oxidation and a lower shelf life for that meat. So let's try and be careful, and also teach folks that even though it's frozen product, we want to be handling it kind of gently. So a little bit about the cold chain. I hate when there's things like this in presentations, but you need to know what goes on in your area. Regulations are different for everyone. There are, it depends on your county and it depends on your state what your regulations are. So ideally you get to know your county health inspector and what the jurisdiction of your space is, which depends on the type of facility you have and the type of business you're running. So you might be falling under ag and markets, or you might be falling under county health department. And like I said, like there are local rules, but general best practices are keeping your storage facilities clean and rodent free and insect free and easy to wash down. Good plumbing and good electrical. I think, you can imagine what that looks like, and you can imagine what that doesn't look like. I think common sense is pretty okay here. But again, you need to get to know your local jurisdiction in your area and what they want to see in that storage facility. Oh,
sorry, my bad. I just pressed on it. Yeah,
there we go. Sorry, no, mine's kind of slow. So frozen product, you want thermometers in all of your coolers, whether it's on site or whenever it's traveling off site. You are not required to have a refrigerated vehicle to transfer your meat. You are required to have cold meat at all times. So if it's frozen, it's got to be below 32. And if it's fresh, it's got to be at 40. And so the only way you're going to know that is to have a thermometer in your coolers. You might want to pop for a refrigerated cooler depending on your distance to your various different sales channels, but that's you weighing the cost of a refrigerated vehicle against what your market possibilities are. Ooh. Okay, so you're a little bit bigger and you have a lot more SKUs, which is another word for product types. So I like to think about it as maybe 75 or above as maybe the point where you're thinking about a barcode tracking and scanning situation. But I think, and as Mariam's going to talk about in a minute, we want to start thinking about this early on. In this scenario, instead of tracking inventory in one single sheet with the different cuts or different species, you might actually break those out into different products on a single tab. Otherwise, you're gonna have a sort of a large master inventory sheet that's recording this in and out of different cuts, and it's gonna get pretty complicated. So separating it out into locations or into SKUs can be a solution, but again, this is where we're feeding into some other options for systems that Mariam's going to get to it to a minute. And this takes a lot of diligence and a dedicated individual, right? We can also talk about using a lot code system for tracking and releasing and rotating your inventory, which is helpful in the event of a recall. You can also be holding it off site if you're large and you're going to be passing on that layer of expense into your cost of goods sold and spreading it across all of the meat that you're harvesting, essentially, because it's going to be a direct cost that changes with the number of pounds that you actually produce every month, quarter, or year, right? And so it might be worth your while to incur that expense for the lesser headache than managing it by yourself, because that warehouse cold storage will have their own inventory management system. You're still going to be responsible for it, and you're going to still need your own system for some things, but you also do release a bit of control there, and you don't have your eyes on your inventory all the time. We're running a little bit behind, so I'm going to skim through this slide pretty quickly. This is also revisited in our supply chain webinars, but I really just wanted to touch on this. This doesn't really get into production planning. Production planning is all about knowing your end date that like a product would get to the market if you're doing something like a more multiple step value added product. So then we're talking about managing and thawing and buying and holding raw product and raw materials. And we're going to have lots of stuff going on in that works in progress stage. So we're going to have even more layers of management, and we're going to have time issues. So all the more reason if you're in sort of more intense production that you need a really solid system. So again, you're going to get the PDF tomorrow. Here's some more resources on labeling and supply chain and actually cutting styles and packaging that I think are really important. But, you know, we wanted to keep it slim today. So at this point, I want to see if we have some questions that might be appropriate for right now. Let's see. Okay, we've got one that says, how can I track my cuts by both piece count and weight in QuickBooks? Mariam, do you want to take that one now or do systems and then get back to that one maybe?
I think we want to get back to that.
Okay, let's hold on to that one.
Mm-hmm. Just remind me of it at the end. Because I don't see, because I'm using all my monitors. I can't see the chat.
Yeah, no worries. And then we've got another one that says that we're doing bi-weekly checks to make sure that it's accurate. This is the same person who was, you know, talking about their POS tracking. Mm-hmm. And so are you also putting that in your accounting software?
If this is a legitimate count and you're just doing it bi-weekly, yes. If you're just peeking at it and it's not thorough and it doesn't do the entire piece of whatever you're looking at, you may be looking at just one species or just one part of it. If you're not doing it all, I would say it's just not comparable, because then you have to say, oh, I only looked at this one part. So it just think of it in terms of consistency and how you're looking across the period. If it's changes, like what you're looking at every time, then you can do it on a piece of paper, but not in your accounting system.
But Mariam, you're usually suggesting like a monthly true up for those situations, yeah, right? With a lot of in and
exactly.
out.
Well, okay. You could do that too, but then it's just that you're doing two entries now as opposed to doing it once. But it's kind of up to you. If you have the time and the willingness, by all means.
Yeah. Okay. And then, yes, I'm happy to share that simple little Excel spreadsheet with registered folks. So I'll send that along with the presentation. Okay. Systems. Let's go for it.
Inventory systems. I'm going to try to be quick and to the point. So the big question is, how do I know when I need a tool and which one? Because everybody's managing inventory. For everyone, inventory is both a blessing and a curse in some ways. And, you know, you all have that question, but like, which one? So it's actually answering some of the questions about your operations. So how much time do you spend on your inventory right now? And do you have any faith in your system or approach? And if you don't, then what parts of it are most suspect to you? Like, what do you not trust the most? How it also, to answer a question of which system should you use, is how precise do you want your costs to be? Meaning, like, do you want to track it in pounds? Do you want to track it in units? Do you want to track it in species, SKUs, subweight? Like, how detailed do you want to get in that? How many SKUs do you have? If you have 3 SKUs, a spreadsheet may be enough. If you have 75 plus, we may be looking at a different standalone inventory system. Do you sell assortments? Now that's the one that trips everybody up, because an assortment is as a collection of more than one cut style or even species. So that assortments infinitely complicate inventory management. We love them though, because they are a big push for sales. So we're trying to find a way to manage both, obviously. How many sales channels do you have? And when I say sales channels, it could be e-commerce, it could be wholesale, it could be farmers market, it could be selling it out of your storefront, like your own brick and mortar location. And when you think about the sales channels, think of the ones that you do like significant sales in, because a lot of people have a wholesale business and then they go to the farmers market and then they sell like occasionally. The occasional part shouldn't be the driver behind which inventory system that you pick. But if you also have your own storefront, in addition to the wholesale business, and you may be selling only 20% from your storefront and like 80% from wholesale, that 20% is significant enough to be considered when you're looking at a tool. Because when you're picking a tool, it should be sort of all encompassing. You can't pick it for just one part of what you're doing. It doesn't make any sense. It's not going to make enough business sense, let's say, because it's going to make things infinitely more complicated. But most importantly, all of this is absolutely doesn't matter if you don't have somebody who knows what they're doing, has attention to detail, and can consistently track your inventory. I've seen people spend thousands of dollars into their inventory systems, building it out, customizing it, and then not using it because nobody wanted to deal with it. Nobody wanted to learn how to do it. So that is like the most important thing at the end. So there are some required system elements, like that you want from that an inventory system has. It basically, the goal is to find a system that is not too simple, because then you wouldn't be capturing critical details that help you make business decisions, or getting something so complicated that it's so labor intensive that nobody's doing it right because nobody really knows how. So the system needs to support your required level of details. Do you want to do it by product or SKU? Do you want it by species, by sales channel, combination of the sum? And then also it needs to support the inventory costing method that you and your accountant have come up with. Because if it doesn't, then it's totally not useful to you. You do not want to make journal entry adjustments at the end of periods. It's going to give you a massive headache. And then there are other system elements like, does it track your cost per unit of measure? And I put that little yellow blurb because it's important. Once you start assigning value to units, you're selecting a specific inventory evaluation method, and you have to discuss this with your CPA before you go out and invest in a big system, for example, or you start doing that because it's implicitly agreeing to something in terms of in the eyes of the IRS. But a system, let's say you agreed to it, has to track your cost per unit of measure. It's pound, but sometimes it's units, depending on sort of what you're looking at. It must also allow tracking inventory by case or in bulk, because that's how you may be selling it. It needs to be able to help you limit your human errors. And that you do because it's either you're limiting access by minimizing manual input, and that's why you would want to, or allowing for automation. So basically, having people touch it as few times as possible. And if they do, instead of filling in a field, for example, it's a drop-down menu or something where they're selecting as opposed to freehand entering things. And it's also important to think about a fragmented access. You don't need your line item person or your production line person having access to modifying the names or SKU numbers. If they do, that's just unnecessary level of access. They mess something up inadvertently, and then you don't know what happened. It needs to be able to show realistic inventory levels in units and dollars at the end of the time period that you selected, because you're going to use that for your inventory counts. I mean, to at least measure actual versus expected. And then one important thing is that inventory systems, they don't have to feed into your accounting system. If you want to keep your accounting books, your chart of accounts down to 10 lines, that's perfectly fine. It just means that you're going to be doing manual input from your inventory systems. So you can have a very simple set of books and very complicated inventory system, and you're the one who's basically making entries, though keeping in mind that the human error element increases when you do that. So potential solutions. The very first one is our friend Excel. So Excel is excellent, and we at Bernoulli have built some custom tools for people. Olivia, I know you've built stuff too. Excels are great because they're easy to understand. There's a very sort of a short learning curve. It's very quick to implement. And it works great when you have 1 to 30 SKUs and you don't have a lot of assortments. Because like I mentioned, assortment is like an extra level of complication. So assortments, you may want to have assortments like packs of 5. That would count as an assortment, but it's a simple one to break down in Excel. Once you start saying it's a pack of 5 beef pieces and lamb, and then there's some eggs, that's a lot more complicated. And if you have 1, we can still manage it in Excel. If you have 50, you may want to think about an inventory, standalone inventory app. Excel does require manual inputs to and from your accounting system. So that increases a little bit of that human error component. And then one thing that obviously we have to talk about is that Excel, you need to know your formulas, you need to know how it's built, and you should build in some self-checks so it pops out issues like, oh, you've entered it, but it doesn't make any sense. So this has to do with how you build out your dashboard in Excel. But Excel, because you're building it yourself, it has some human, like some elements of that a programmer have thought of, but you may not have thought of when you're using that. And then there is the inventory system apps. So these can be a standalone software, like that's based on your computer, it's on your server. It could be in the cloud. And I haven't written it in here because I was just thinking about it right before this meeting, but if you have QuickBooks Online or Xero Online, because both of these are cloud solutions, you should always opt for an inventory app that is in the cloud. They will sync with each other. It will be seamless. It will be amazing if you end up syncing them. If you have QuickBooks Desktop or some other desktop-based application, you could look into, in the cloud, or you can look for a desktop-based solution. But you should never have a desktop-based inventory system when you have a cloud-based accounting. So it's just, you will end up with having so many manual issues that don't even just go down that route. Like take my advice on that. Inventory system apps are great when you have more than 30 SKUs, when you have major sales channels, like many major sales channels. So you have a fully fledged e-com business and a fully fledged wholesale business. And you're also running a very good farmers market stand, or even several. So this is basically anywhere from like a really big e-com to like a number of things. This is great if your product selection changes from season to season, month to month, and when the prices vary from channel to channel, like even from e-com to farmers market. And when you have complex inputs, so this is where we're talking about assortments, or when you have the cost of production, or like the cost of processing that is complicated. Typically, inventory system apps are not just for managing inventory. They will also have a module for helping you with order fulfillment. And because of that, I mean, you could use just the inventory management, but typically you would be using like the entire flow, basically inventory and fulfillment. And they do have complex implementation. I mean, from not to vary, but definitely a longer learning curve than Excel. So you could not, for example, you could ease into these systems. You could start with some part on Excel and some part in this inventory system app. And as you get comfortable, you can add more and more features as you go along. But it is a long-term forward-facing solution. Like I said, you're easing into it. You could start using more features as your operations grow. And so this system that you're getting into, you're going to grow with it. It's going to grow with you because systems also change and they add features. So when you're switching an inventory system app, you have to consider some elements that are beyond inventory management, because like I said, it usually has all the way, like the supply chain, all the way sort of through the fulfillment part. So it will become backbones of your operations. And so you have to, when you're considering inventory systems, these are some of the questions that you have to ask yourself. I think in the interest of time, I may just like skip them, but read through them and because this is what you would be looking at when you're evaluating different systems. Will it sync with what I have? Will it sync with what my sales channels are, with my accounting system? Is it flexible? Can I use it on the go? Does it support barcodes, et cetera, et cetera? And this, I just wanted to give you some like parting tips. These are some of the systems that I used. Finale Inventory, it's a cloud app. One system that I saw that really allows tracking inventory without putting costs to it, which is great, and Poppy loved it. It has some other limitations that you can circumvent, but this one I felt like was the easiest one from that perspective if you don't want to track costs. Deere Systems ERP, it's an ERP, so it's a massive system. Like it actually does manufacturing and everything. It's so user-friendly that you don't have to, like, you could use it even if you're using like 5% of it and still feel comfortable. And then SOS Inventory was kind of the most cost-effective, and it works really well when you have Shopify and QuickBooks, like that specific combination. And just parting tips on the implementation, if you do get into it. when you are selecting a system and you're setting it up, don't think now, think 2 to 5 years. It's a big investment, so you really got to think forward. Inventory systems are hard to get to and even harder to get out of because you build habits and habits are hard to break. You will have to sacrifice some of the freedom that you have right now. Right now, you have a piece of paper and a pen, let's say, and you're like, oh, I'm just going to scribble it here. I have a little stack of papers. At the end of the month, I sit down and I plug them into my accounting system. Inventory systems will so not let you do that, and you will have to compromise that freedom. But with it will come accountability, dependability, and the best thing of all, live inventory levels, something that you may not have right now. And the last thing is that you should have somebody holding your hand through the implementation, because I've seen things implemented wrong and just being so headachy that people will give up on a system before even giving it a chance. So those are the 4 tips that I would say. And with that, I will open up the floor for Q&A.
Awesome. Thank you, Mariam. That's
Sorry, I rushed at the end there.
no, that was still good. Let's stop our share, maybe. I can't.
Oh, yeah.
So we can see people as they maybe turn your vid on if you want to ask questions. And let's see. Let's go back up to this tracking by cuts. And first of all, thank you everybody for sticking with us here. We know we're supposed to be done, but if you want to stick around for 10 minutes of the Q&A, we do too. And I want to make sure we get to the ones that are in the chat. So how can I track my cuts by both piece count and weight in QuickBooks? It's more like, do we recommend that you do that? I think is the answer to that question.
So
Mariam.
sorry, can you read it again? By piece and by?
How can I track my cuts by both piece count and weight in QuickBooks?
The short answer is you can't. You have to pick one or the other. QuickBooks, so QuickBooks okay, I don't know which QuickBooks you have, but let's say QuickBooks Online, and whoever it is, speak up because, we can have a conversation really quick. QuickBooks Online is super limited in its inventory module. QuickBooks Desktop, Basic, Premier, or Pro is too. There is a thing called Enterprise, which is like actually meant for production and inventory management that may allow you to do that. But you will run into, like, I feel like it's a very error prone world. You could do it if you, I mean, I suppose if your name has a pound, like you put in the name, the pound, like a weight, and then you have a count of them. And then you run a report like in Excel and then just like do some basic calculations, you could, but it still requires some manipulation.
Yeah.
So
Yeah, I would just sort of suggest keeping that information elsewhere.
Yeah.
To cross-reference.
Right.
But just one thing though, QuickBooks recently, so keep an eye out for it. QuickBooks Online recently bought this inventory management system called TradeGecko, and they're officially rolling it into QuickBooks Online as a module. So we may, I know they're stopping TradeGecko as a service because I have a client who's losing it and is really upset about it. But the goal of it is sometime this year to roll it out as part of QuickBooks Online. I don't know when it will happen, but that's where it's going. So for all we know, in 6 months' time, QuickBooks may have this thing, because that's what is that for QuickBooks, that was the only thing they didn't do. And I was just like literally waiting, like going, at what point are you going to offer that system? Because you're losing money and clients. So we'll see. That's an interesting development.
Cool. All right. So we've got one other one that says, does anyone know of good apps or software that can manage inventory and also take yield and loss into account? We'd love to have an app that can track from carcass to retail pack, and if not help us with COGS, at least give us yield information. And then he adds, oh, and in an ideal world, it would live in the cloud and sync with our e-commerce and accounting platforms, right? But isn't that Deer? Doesn't Deer do exactly that?
So any ERP system like Deer or like Sin7, anywhere, basically think of your meat as a recipe. So any system that does recipe, because when I talk to so many inventory systems, and every time I would say meat, they were like, what? But if I say, oh, they're in bakery business, they're like, oh, we get it, and bakery has yield losses too, So any system that has like an ERP in its description would be able to help you manage it. Now, this is where I come back to my parting tip. Make sure you have an implementation specialist, because this thing can go really, really wrong if you don't set it up correctly.
Can I,
Like it'll
can
give
I,
you
sorry,
wrong.
follow up? That was my question.
Okay.
It is a recipe, but there's a difference too that I keep running into when looking for systems that can work, especially for businesses that are not huge. A bakery is an assembly system. You take 15 pieces, you make one cookie.
Mm-hmm.
A cow is a disassembly system. You take one carcass and you make 150 cuts, and not all systems can handle that so easily. And that really is a serious limitation that we're running into in looking for systems.
I looked at Deere and from Deere Systems. So from my many conversations with them, they can handle the losses. So you're basically your yield losses along the way, and they will able to like write it off for you. So I would recommend reaching out to them and talking to them. The only problem, like I was saying, is that their basic line inventory person, not inventory, a sales assistant person may not be able to answer that question. So I would just kind of push at them until they kind of give you somebody who is a specialist. There are Deere implementation specialists too, who can guide you like a consultant. So you may be able to get somebody for a consultation, for instance, who can tell you yay or nay for your specific. But we've done that. We're doing that for a client of ours who's actually, what they're doing is they're putting in the weight of the cows. We have a little spreadsheet that runs alongside because it simplifies things a lot. But essentially, they're putting in their weights, and they're putting in their processing costs and all of that stuff, and then they're assembling.
They're putting in carcass weights, right?
Carcass weights, yeah. But it's just knowing which number to put, because you have that as part of your invoice, for example, anyways.
Okay, thank you. That's helpful.
Sure. Anyone else? Okay.
And Leah just dropped in the chat our evaluation. We'd love for you all to answer those questions and give us some data on how this felt for you and what was missing or what you wanted to learn. And
Andy, did you have a question? It seemed like you were raising your hand.
Yes, I just didn't want to interrupt the survey comment.
Thank you.
Yeah, a question on advice for how to inventory and sell bulk beef. We sell by the eighth, quarter, and half animal, and last year we sort of inventoried our animals by the animal versus by the cut, and each animal is a little bit different. And some customers complaining about, oh, I got so much more meat than my neighbor who got less meat, and obviously discuss with them how each animal is different and things of that nature. But it does seem like there might be a good way to try to make that a little bit cleaner for the customer, so that it's not as much of an explanation for every single step of the way.
I'll hop in here. I think your question, Andy, is really about communications and about how you market your offerings more so than how you manage your inventory, from what it sounds like to me. And I think in a situation where you're selling halves, quarters, eighths, especially in a custom exempt environment where individuals are paying for the processing directly, what I like to think about it as an offering of a level of customer service that is really different, right? So creating templatized emails, creating uniform information on your website that's very in depth, playing interlocutor between the customer and the processor and actually helping manage those conversations in a way that is also systematized for you. So you're not inventing the email every time, you're not inventing the call script every time. I think that that's an appreciated aspect of marketing for folks that are small and needs a lot of focus and attention. And we did talk a good bit about what that looks like actually in our some marketing classes in the past. So I see that as a as a marketing question, but I want to make sure that if there's an inventory question back there, that we get at it, because there's also the record keeping aspect. I know it sounds like I'm just like plugging our tools, but we did try to think through like business tools that would be useful across the gamut. But in our yield and margin calculator, there is record keeping for every harvest, so that you are tracking specific weights all the way through every breakdown separately, and then looking at averages. So that's record keeping, right, for you and your individual animals. And then when you get into inventory, since you've already got that somewhere else, you can start to look at halves, quarters, eighths, or, box meat as what you're holding in a different sense, because you've already addressed the yield off of your animals somewhere else. And then we've got the marketing component, which is how do you talk about that in a way that doesn't tire you out every time? And it's a really important piece, that is easy to just to forget about, because you're busy farming. The one other thing I will say is that the Good Meat Project Breakdown, the Good Meat Breakdown, is a really incredible resource that is developing tools right now for those of you that are selling bulk, CSA, custom exempt processed, to develop uniform language, images that you can use for free, downloadable PDFs for your marketing, to talk to customers about how much is going to fit in their freezer, how much are they going to get off of their animal, that are really snazzy and jazzy and pretty, and literally are being made so that you can lift them and take them for free. And SWGLA is involved in a large grant with them as well. And they're just spending a ton of time in the next 3 years and a lot of the USDA's money to make more of these marketing materials. So I would head over to, I'll drop that website in the chat right now. But back to Andy, if there's an inventory question in there that I did not hear.
I think you're right that it is more of a marketing question, and it's a question about how do we want to sell our meat for easy inventorying, because I think there's both there, and we handle all the processing communication so that it's not difficult for our customers, and we box all their meat for them and just try to make it like there's like a variety box that is an eighth of an animal. But I don't really think that there's a clear inventory question in here, and it's just good things to think about and think through more.
Yeah, and I think what's important for you in that sense, like that's where getting into the assortments, right? You're getting a carcass back, you want to know what that is, but you want to also know what you have on hand so that you can make those boxes evenly, right? So make sure you're recording your yield off your carcass somewhere else. And that by the time it gets into your freezer, then you're really thinking about it as units so that you can manage that box building in an easy way, and throw in offal, and throw in, and keeping track of, if you're really small, keeping track of what customers are getting each, if they're on a subscription service, like what they're getting, if they're getting a variety of cuts. So they're not getting the short ribs every time. If you're working through like primals, so that they're getting the fillet, or they're getting the skirt, and then they're getting the short ribs. Like there's ways to do that with multiple spreadsheets. I hate to say it. I don't know, Mariam, if there's anything you wanted to add to that, or did we?
I was just thinking about how we handle it for that one client who has, but they sell primals by weight. So, well, their primals are actually in categories. So it'll be like this pounds to this pounds and this pounds to this pounds. And so their cost associated, like an average cost, like they know their cost per pound, and then they sell it at an average. So like your neighbor, for example, could get like, I don't know, whatever, 15 to 20, and then the other one would get 20 to 25, and they'd pay a slightly different cost, but they track their cost per pound.
Yeah,
but
this is a slightly different model in terms of sales, where they're actually breaking down the cow.
So they are just selling, yeah. For them, it's communication, because if your box, for example, has like higher price cuts, it is in the marketing, it is in the verbiage. It's just basically saying you're like, this time you're getting less meat, but you're getting like these really, really high value pieces like filet, or, like T-bone steaks or something. And that's why it's not weighs much, but it's higher grade, for example, or something like that. But what they try to do is they try to sort of, for every expensive thing, there'll be like 2 cheaper ones. And it's the art of making an assortment. It will come eventually to where they also look at some cuts as equal, so it's they can substitute like ground with some different type of meat that's similar to ground, so that people tend to feel that they're getting a same value, even though really in weight or in the cut styles it's somewhat different. But that's the assortment. The inventorying of that is very complicated, the assortment element. So I don't know how you're doing it.
Other questions from folks?
think
And
not.
also, well, we forgot our thank you slide, but I'm gonna drop my email in the chat, and Mariam, why don't you do the same?
Yes.
And we would love to hear from you guys, you all, as frequently as you would like to, and you will be receiving presentation and my little dorky spreadsheet. It's very simple. But don't hesitate to reach out. We'd love to answer questions and follow up with you all as you get into it.
Definitely.
And fill out the survey, please. All right, I think we're good. Thanks to Kavira for hosting.
Oh, you had a question, Andy?
One last question that has nothing to do with inventory, but we're slowly starting to get into wholesale accounts in terms of selling. Do you have any webinars on pricing to wholesale accounts where it's not as easy to find what maybe other people are pricing or what like beef prices are for that?
Yeah,
sort
we
of
have on the SWGLA site, there's a sales strategy webinar that talks about how you should be determining your pricing and an overarching method of balancing what's called market pricing with cost-based pricing. So you are balancing what the market can bear based on what your expenses are and heading for the middle. It's not going to do, my webinar is not going to do the raw research for you of talking to buyers. Unfortunately, that's actually sort of the key tip. And we do have another wholesale marketing webinar on the site as well. It was a little bit more based on COVID, but it's a really interesting buyers roundtable with all different wholesale buyers, restaurant, third-party aggregators that sell through e-commerce, and distributors and retailers all talking about what they need from their producers, their small-scale producers. So I would check out those two, and then just let you know that it's going to come from actually talking to potential buyers to know what their price point, what they want their price point to be based on what they see. And other producers as well, the friendly ones.
Thank you.
Yeah. Okay, I think we're good. Thanks for hanging in there, guys. And be in touch.